6 consecutive weeks for Dow Jones. That's how many weeks Dow Jones in a row has been going green. And last week ended green as well. Dow Jones up 0.96%. And Nasdaq, another green week for Nasdaq, up 0.8%. Ending the week at 18,489 points. And quarter results, they are coming in, and so far 79% of all quarter results at S&P 500 are coming in above expectations. But we somewhat knew this because the expectations was already lower before quarter season. And this week there is yet another round of quarter results coming, and Tesla on Wednesday will be maybe the main topic. You're listening to the stockinvest.us podcast Trading Tips with Jim, and this week I will give you insight to a few new tools that maybe will help you in your trading. By the way, mentioned this last week, but let's quickly look at the week ahead. So what are the things that will happen this week? Well, it will be a quarter results week for sure. We will be hammered by big companies releasing quarter results, not so many today, but tomorrow on Tuesday there will be GM, M, and Lockheed Martin, to mention some. And I think maybe look into Lockheed because I think they might give very strong results and there might be a good upside in the stock afterwards. On Wednesday, as I said, will be Tesla, all eyes on Tesla, but we know that there is a slight uptick in electric vehicles. We see it all over, but also spoken a lot about this in this podcast series, how infrastructure is getting better and how we, after having to reduce outlooks, are getting to common sense and building EV in a better fashion. But EV is here to come, that's my firm belief, as I've been saying all over especially the last 2 years. In the first period it was way too hyped, but now we are back to reality and we see sales of EV going up, and I believe maybe Tesla will show some very good results on Thursday. They are fighting, of course, for market shares like how it should be, but right now it is Tesla and China mainly, as we know. Europe have not put it on ice, but they are really struggling with the economy in general, and the fight for electric vehicles so far seems to be between US and China. On Wednesday we'll also have Coca Cola. Very interesting because Coca Cola represent consumers, and I like to see how consumers are going. I read last week that Walgreens, for instance, is closing 1,000 of their shops in United States, and last week it was almost every day there was someone cutting down their shops and everything. Again, this has been mentioned before, that we would see this trend. I mentioned this maybe a year ago, that will be the results. And now we actually see it come into effect, because after we had inflation, where you of course have to increase your prices, then you do your shrinkflation, and all these things doesn't help. You just have to cut the meat that is not producing as good as it should, and that's exactly what Walgreens said. We will just cut the shops that cannot deliver the profit margins that we require. And I'll get to the main argument here. So we see this happening, and we see this not only in consumers, but many places. We see they are cutting down their shops simply because you, the end consumer, are not having your same buying pattern like you had before. Your buying power has gone down over the last 3-4 years. Especially last 2, after the huge inflation. So of course your buying power goes down, you start to prioritize. That was why I said maybe we should get into different stocks than these luxury brands. For those following me, remember I said no, I think luxury brands will struggle. People will change their behavior. They will go into more like Costco, Lidl, all these kind of shops, going for the cheaper option. And we could even see this now in the pizza chains, etc., like Domino etc. And that's why Coca Cola is so interesting to watch on Wednesday when they have quarter results, because it will tell a lot about consumer behavior. What happens when they start to close all these shops? Well, there will be less access to the goods, and there will be more fights about the goods where it's accessible. This will drive prices up. And before getting to Thursday and Friday, let's do a little on this one, because as you know, I love gold, and gold went past $2,700, hitting $2,746 as we speak, all-time high, and it doesn't seem to be an end in the uptake of gold. And I believe it was Bloomberg who had a small sequence about this, trying to analyze why gold would go up. You might be confused because half the time they say it should go down. Now is the end of gold, but you heard it here. You heard it here in this podcast. I told you gold will go to 2,500. I bought myself at 1,600. When we hit 2,005, I said new target 3,500. I'm very bullish still about gold. And Bloomberg in this last interview gave 3 major reasons why gold is going up, and here they are. So he said people fear recession/inflation. That's one reason why gold is pushing upwards, meaning that maybe gold is showing that we are not finished by inflation yet. And my prediction still is the same. We will head into higher inflation as we move forward. The other thing was geopolitical problems, and these are just continuing sadly to escalate. Now it's between North Korea and South Korea is issues again, and Taiwan is slowly popping up on the agenda, and we have Ukraine now trying to push even harder to do long rocket strikes into Russia. And of course Israel, Iran and the Middle East is by no means over. Israel is not listening to US right now. They do as they have been determined to do. Spoke a little bit about that last podcast, how there is no option to certain things and why they lead on to these things. So number 2 for the reason why gold was going up is because of geopolitical issues, and people, the really professional ones, they are betting on things getting worse before getting better, pushing gold as a safe haven upwards. So that still argues for my if you are in the war industry, if you followed my advice 3 years ago to get into war industry, if you still are there, so stay. Dividends will be good, and watch Lockheed Martin on Tuesday. The third and the final argument was US dollar might be under threat, and you also heard this in the podcast series a long time ago. What happens when we do the sanctions against Russia like we do? You will divide the world, suddenly we have BRICS. All of this has been spoken. I will not speak too much about it in this podcast. So that is happening, and everyone is seeing it now. BRICS launched their own card last week, I believe it was, and more are joining BRICS. And that is not good news for dollars. So, according to the Bloomberg interview, gold might be going up because the trust into dollars is getting less. And now it starts to become a little repetitive again, but you heard me say that I will go into Asia when Asia was super low, and I gave you all the reasons for it. And Asia just keeps delivering. If I can teach you anything, it is try to diversify your portfolio. Look at the very, very big lines, because we cannot be correct on everything. We cannot be correct, and most of you are losing money. You go into stocks, you think you got it correct, but you haven't got it correct, just to see your stock fall. Losing money because you're doing many of the same mistakes I did and still do, and most people actually do, which is getting into few too stocks, not being diversified enough, overestimating your abilities, going into too high risks, etc. is the way to lose money. And we try to offset these, or at least I try to teach you a few things to offset some of the risks. And stop loss, of course, been mentioning a million times, but understanding long lines and trying to trade within good trends, because if you are in a good trend, you are more likely to hit good than if you try to play a trend which is falling. And that long tips for me is still right now is gold, war, and EV. I believe EV is very close to a bottom, and we will get back to that in the $1,000 challenge, where I will tell you which stock I will buy today. $1,000 challenge sitting at $2,971. We grew 1,000 to $2,917, but we were almost at 4,000. We had a few bad trades lately. Will this one put things back on track? Well, you have to wait till the end of podcast and I will tell you what I will do. Now, back to Thursday and Friday. So Friday there will be UPS and beyond. There is much more companies than this. I'm just mentioning those which I think are at least play some role for me. I think I forgot to mention that on Wednesday is also Viking Therapeutics. Interesting. Thursday you will also have the job numbers. Again, anything before this election, I wouldn't put too much faith in all the numbers. This will be adjusted after election. You can follow them, but if anything is moving the market this week, I believe it will be quarter results. No, they will move the market. The general market is just in a very good place. Very little resistance for Nasdaq above current levels, plenty of support below today's levels. Buy signals from short-term averaging short and long-term moving average, even the correlation, the combination between the two of them, so-called golden cross, not golden star, but golden cross, because Nasdaq had a golden star. My signal event in 2007 had that a year ago or something. Close to that 8-9 months ago, it had a golden star. You will find this in the long-term chart, and it's been doing very well after. So for Nasdaq, I think that there is a fair chance that it will just continue upwards. If anything moves it will be quarter results, and of course in the back end of this, do know that the global geopolitical issues are growing up. And that is somewhat a slight concern, because things just very on shorthand can change very drastically, which in my guess will put the pressure on the oil price. Oil currently sitting at $70 after falling $4 last week. So it was 74, now it's $70. At getagraph.com I made a market status to make it more easier for you to see signals. For Nasdaq it was dead on. Previous it had a supercell signals in it will be end of early July. Markets fell quite heavily, and then it got into buy signals in the early August, still at buy signals. But if we look at the page, we can clearly see that we are getting into levels where we are at the upper end. But at the upper end, we can have a rally that will move us easily up to Nasdaq at 20,000 points. What I'm trying to convey here is that no risk is getting on, or at least very close to the top, in my opinion, short term. Happy also to read that different sectors did good last week. Been waiting for these things. Mentioned a few sectors that clearly had an upside, and some of them had a good upside last week. It's also about understanding trends. Buy and sell signals as follows across all stocks that we analyze. 41% have buy signals. It is a little too high. Indeed, it's a little too high. Nasdaq, not too bad, 21% there, because a lot of these smaller stocks still have not performed as good. You probably are in some of the smaller stocks, and you have seen markets green day after day, week after week, but your stock not doing the same. It is because it's been very diversified. It's mainly been the big stocks driving the market, like Netflix last week was able to pull a little bit. New York Stock Exchange 43, same as last week, very high there. London 32 up from 28, while Frankfurt up from 45 to 56% buy signals in Frankfurt. Tokyo remains more or less the same, 18% buy signals, while the Shenzhen China had a fabulous week. Buy signals all over the place. Getting way too high, now there will be a soon fall. I will liquidate some of my positions I have. I will get back in a little bit later, but so far, what a nice treat that was. And National Stock Exchange of India are more or less the same at 26, but if you are from India, and I know a few of you are from India listening to this podcast, well, looking at NSAI chart, we can clearly see that NSAI now is oversold, still within a nice rising trend. And I believe there is a high chance that it might do good during this week. And still, while talking about NSAI, I was given this challenge by one of my listeners to mention a little bit more about National Stock Exchange of India and Indian stocks in India. And I said if I would go into any stock, I would go into Bharti Hexacom with the ticker Bharti Hexa, long ticker there. And when I said this, it was 1090 rupee, currently sitting at 1606 rupee, up 47.34%. I didn't buy it because I don't have access to stocks in India, but what a nice trade. And hopefully some of you picked up on that advice and you're sitting and everything still looks good for this stock. You're sitting in Bharti Hexacom. And if you are if you have been able to get out of something from this very nice upturn, I'm very happy for you, very happy for you. I hope the upturn continues, and soon I will get back to you with possible new ticker for National Stock Exchange of India. But so far, still the bet are in Bharti Hexacom, as I said, up 47.34%. Getting very close to the $1,000 challenge. Last week I said I will not speak too long, I ended up speaking half an hour, but this time I will for sure not do that. Oil, as I said, $70, the 10-year treasury yield that we like to follow because it gives an insight of how people assume interest rates will go. Same as last week at 407. The expectations is that in November there will be a 0.25% cut in US interest rates. It might be that they will try to place interest cut just before election days to sway people. We will see, but my guess, as I said, and numbers are showing it, I believe inflation will rage, and again, and unemployment sadly will increase. Unemployment numbers, as I said, on Thursday. 18 minutes into this podcast. You've been listening, I've been trying to talk fast. Let's slow it a little bit down, because here is the $1,000 challenge. And by the way, if you like this podcast, why don't you like it? Why don't you recommend it to a friend? And if you have a question, just post it on YouTube. We have a YouTube and a podcast Spotify version. But please, if you have any questions, and I will try to answer them, just have a comment and I will try to answer them in the podcast if it's a good one. And most of you will have good questions, I'm pretty sure about it. $1,000 challenge. I try to grow $1,000 as fast as I can. I started a year ago. Has gone a little slower than I expected, but still we are up from $1,000. It has become $2,917. They are staying on my account. $0.11 to be on the dot. They are standing on my account waiting for a new trade. What happened? We went in, or I went into NEO. NEO did exactly what it should. It was up more than 20% in the portfolio, but I was taking a gamble, not following. And later it was cut by stop loss. That was when we were around $4,000. After NEO was cut by stop loss, and I told you I believe NEO would be a very good place to be. NEO went all the way up to 7, from 4 to 7. Such a nice, we would be up at such a nice place to be in the $1,000 challenge if I just had said, but I had a stop loss which I thought would handle the swings. And this is stop loss. Sometimes they kill your trade. and you regret it. But overall, it will help you. I promise you that. Just look at 10 trades or 50 trades, you will see what I mean. Stop loss will save you, guaranteed. But in some cases, no, you go and you see your stop sold, and later it went off. After NIO, I went into Fate. Fate also did the same thing. Bought Fate at $3.41. Fate went up to, I believe, just about 420 something. We were up again 17, 18, 19, 30% or something like this. I was off to holiday and had a stop loss which I thought could handle Fate at 3.27, but Fate dipped under and was cut, making a good trade, perfectly trade at a loss of 4.11%, bringing the $1,000 challenge down to $2,917. Yes, I should have taken profit, but I told you this is a super high risk portfolio where I'm not looking for small gains. Yes, we could do like I did in the very successful portfolio series that I had before the $1,000 challenge, where we just hunt a few percentages because they add up in the long run. And of course, I could go into stocks this week with expectations of only gaining 3-4%, which is very good, by the way. It's extremely good, by the way, and I will show you a tool now in just a few minutes. So we could go for these few gains, make good money. But in this portfolio, I said I will follow a strategy of picking up stocks which I think can go very far, and that's how we will ride it. It's a super high risk portfolio. I'm not in it for the small, I'm in it to see if I really can make a dent. If you look at the average return, of course, it's been very successful, but it could have been much more successful. I was hoping to be at 10,000, right now being up 10 times, because I have done this one time before. That's how I started my trading. I got into a very successful streak following a certain pattern where I just gambled very hard. For this week, and some of you might be surprised, some of you may not be surprised, but I will get back into NIO because we know pattern of NIO a little bit, and as I argued over again, I think there is a huge upside in tech. Hopefully Tesla on Wednesday, mentioned Tesla will have quarter results Wednesday, will come with some good results, pulling everything up. The reason why NIO fell back from 7 is because of all these tariff trades. And it is mainly Donald Trump speaking. That is why crypto is going so good lately, because the polls shows that Trump is likely to win. He is very pro crypto. I of course loaded into crypto, super happy about these things, setting new records in my personal portfolio. But I told you I diversify. I have two things which is doing very good for me right now. It's crypto and it is lending. That's been very stable, averaging now at 13% return. Quite happy about that. It's a nice return actually, all reinvested. And dividend stocks been doing very good. They have not performed very good stock wise, price wise, but hitting these strong dividend payers. You will find it at getthegraph.com. You will find I made a list showing what I call the ultimate dividend list. It's a very good one indeed. And I only pick stocks from that list myself, giving them a dividend score. I have ranked everything, created a score, trying to organize these things, looking at the possible next dividend. So many things are implemented. The list so far been doing very well. My stock trading in general hasn't been doing, I've been a little bit too passive. As I told you, I'm not fully invested into the stock market simply because I think it's at the edge of something and I don't want to be there the day things really go south. And the ones that I have is a little passive invested, but I have into high risk, more risky stocks. So I'm already into EV. I've been buying NIO at several points, trying to figure the bottom, and the average is starting to look somewhat okay. Will it be correct or not? I don't know. But right now, NIO is falling because Trump is talking about hitting 100% tariff, etc. I love crypto, he says. Crypto goes up. I will put all world of tariffs on China, so NIO go down. But I think in between here and the pressure still for the Green Deal across the world and how governments will have to spend money to grow economies back on track, especially if we go to Europe. And sooner or later the same thing will be in in the US to stimulate the economy more. You will see more money keep. We remember that this happened 3 years ago. Putting money into bus companies that later went bust, insane amount of money. But these things will get back. Now they will be better organized, better planned. They will be more structured. Already see charges growing across different countries. Availability to charge your EV is essential if you have an EV to be able to charge it while driving. So all of these things, infrastructure is getting better, and I think EV has an upside. Hopefully Tesla will come with good results. Pull NIO up. Why don't I go into Tesla? Well, because that's also EV. We could do that. Somewhere in between, because I see a very nice upside in Tesla. Problem with Tesla right now is, of course, again, we try not to talk too much about politics, but Elon is supporting Trump, and of course then everything on the left side is going after Elon, trying to demonizing him as much as they can, hurt his business. So you will see more and more news related bad news, but still doesn't matter as much as me, because realism eventually win. Market caps, logistics, you cannot deny Tesla done quite many nice things. I believe there is an upside, and I believe Wednesday's numbers will show that Tesla is delivering. Hopefully it will pull NIO. NIO will be the $1,000 challenge tip this week. I will end with this. The tool, I promised you a tool at getograph.com. I have invented yet another tool. It will be available for you to use during this week. But I will post on the YouTube video. We'll see what I see. I have made a trading pattern detecting tool, detecting the most likely pattern of the stocks. I've been telling you there are certain times of the day where you should buy, where you should sell. And for today's NIO trading, that will be posted. This chart will be posted on the YouTube version, where you will see it, where you will see the chart itself. It suggests that I should buy the stock by the end of the day. So that is exactly what I will do. Usually it's around 10:30, and if you watch the chart, you will see there is a dip around 10:30. But for this chart, which is weighted on the time period, estimating how NIO will go today, actually suggesting that NIO will fall today, giving the best buying opportunity at the end of the day. So that's most likely where I will place my NIO trade today. I will try to remember to write a comment on the YouTube when I do it. 30 minutes, close to 30 minutes, 28 minutes, time to say goodbye. I hope you will have the best trading week you ever had. I hope that you will increase your bank numbers by the triple and the quadruple. And more so, I just hope that you will have a beautiful week in general. Hopefully we will be back when I will be back next week. Until then, bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.